Hello, welcome back to the channel. It's been a while. Just wanted to give you guys an update and show you what I've been doing. So at the moment, I'm up about 110% year on year. That's been mainly due to SoFi, which I'm up about 23,000 USD on compared to the rest are a bit smaller. And for my first video, I've sold off a few stocks, namely PayPal and Block, and I've put it all into Shift 4, which is this stock right here. So the reason I think I've been able to grow my portfolio so much is because I heavily invested into SoFi. As you can see here, my cost basis was only 8,000, and back then, before I had capital that I do now, that was a lot compared to the rest of my other stocks. They're around these, which are about 3, some 2, some 4, some even less than 2. But I invested heavily into SoFi when it was down in the 7s and 8s, which is where you can see my average price there of 7.29. I think just finding a gem and kind of really heavily investing in it and making sure that you've done the right research and in what you believe is a good stock and a good buy. So now I found that Shift 4 is in a similar position. So I've put in about 10,000. I'm down about 462, which isn't really much. It's about where I bought in. My average price is 83. It's currently at 79. And I'm going to show you guys why I think this is going to be the next stock where I gain almost 400% like SoFi. So if we look at the stock right now, it's about around $80. And if we go to analysis on here, we can see that. So if we look at the earnings estimates this year, they're expected to do about 5.45 in earnings and 6.85 the following year. That's around a 25-ish% gain, and management have said that they're aiming for about 30% earnings and 30% revenue through to I think 2028. So if they expect it to grow at around 25 to 30% and they're valued at under a 12 forward PE, that's getting the share price and dividing it by the earnings estimates for the following year, that's way undervalued. If we look at stocks like Google, Facebook, those are in the 25s to 30s. And if you look at other stocks like Tesla or something, that I don't know, it's in the hundreds somewhere. So this stock is really cheap considering the growth, and they've also got twice as much cash as they do debt. So it's a pretty safe company, pretty reliable, not at a major risk, and analysts think that they're going to do pretty well. Like, think that they're pretty undervalued compared to fair value, and they're growing quick. Management's good. If you watch this video here, I spoke about Jared Isaacman. I think he's a great entrepreneur, but his former COO, Taylor Lauber, has now taken over the CEO position while he's become the chairman of the board. So he's still active, but he's passed on his CEO roles to Taylor Lauber. So on top of the update, I kind of just wanted to give a bit of a warning. You know, the market's at an all-time high. You hear about stocks going up 30+%, like one of my stocks here, AMD, that went up about 30% a couple of days ago, and it's only gone up. I think it went up 11% the other day on top of that. So that's skyrocketing because of their deal with OpenAI. So I wanted to issue a bit of a warning, you know, in terms of getting into the market right now. They aren't even profitable yet. If we look at OpenDoor, for example, they have a negative net income and their revenue is only growing 3.7%. Now, I haven't actually done a deep dive, but I've seen this stock been skyrocketing up, and I've heard people talking about it on social media and stuff. And I think, you know, it's really risky getting into companies like this that are just speculative compared to Shift 4 or SoFi. You know, these stocks they're not profitable. They're not growing as quick. It might be valid, but it's not for me. And it skyrocketed up so much. So another one that I wanted to look at was Palantir. I used to hold this stock in the teens, and sold it at around 60-ish, which, you know, in hindsight, maybe holding it for a bit longer would have done a bit better, seeing that it's 3x from there. But, you know, I'm not mad that I sold it because I put more into SoFi, I put more into my other stocks that went up. Did they have higher returns? Maybe not, but this one's fueled mostly on hype. I mean, it's a 400 billion plus market cap with a quarterly revenue of 100 billion. You know, that pretty much means that at their current revenue, they're going to take 100 years just to get to their market cap. And that's not even their earnings. They're going to take 610 years of their current earnings to get to their market cap. Now, that's mostly because of the high growth that people are expecting from this AI company. But if we look at the growth, you know, 48% revenue, net income's growing quick. But that's because the year before they had a relatively low net income. And if we compare that to SoFi, look at that. Earnings are growing quicker. That's also because they had low earnings, but similar revenue, and the growth is pretty similar as well. You know, I think whatever that was, 47% to 44%. You know, it's pretty similar, but the market cap is less than a tenth of the value. So that's what I'm saying. You know, these stocks, they have similar growth, similar profitability, but, you know, just all the hype and everything just pushing those stocks up. And if you buy it at the top, you know, we've seen this with other stock like Block stock here when they IPO IPO'd, it was rushing up to like the 160s back when they weren't as profitable and they didn't have strong fundamentals. And then after all that hype died, they kind of just crashed down and they've just been, you know, teetering along. This is one that I used to own, but I sold it to put it in Shift 4 because I saw more potential. So now this company is starting to be profitable. Its fundamentals are growing a bit stronger. As you see here, you know, they're profitable for the quarter. So now is a decent time to invest in these kinds of companies. But like currently the Palantirs, the Open Doors, you know, I wouldn't really touch it just yet. Also, the reason I'm talking about Open Doors is because I heard one of my friends talking about it that didn't have much experience of investing in the stock market and said that they bought it and it went up like 20% in a day and stuff like that. And that's kind of the early signs of a bubble, is when people who don't have much expertise on investing and things like you see it in crypto, you know, back when my friends in high school buying random cryptos back when it was booming. And since then, most of those cryptos have crashed. So just a bit of a warning, you know, make sure you keep the fundamentals in mind. Make sure that the companies you're investing in are profitable and have a clear trajectory to where they're going in the future. Management is like honest, they have clear goals, and their progress is measurable. Yeah, hope you guys enjoyed that video. I might do a deeper dive on Shift 4, considering that's the most amount of money I've ever put into a stock. You know, SoFi right now is sitting at above 30,000, but that's because it's increased so much. My cost basis was 8,000, and I sold my PayPal and Block shares and dumped it into 4 when I had the massive drop, and I'm looking for the stock price to catch up with the fundamentals according to the earnings potential and the growth potential of this stock. You know, I'm not sure if it'll be as good of a stock as SoFi. It doesn't have that growth and that earning that's as consistent as SoFi is right now, but I still see it as a, you know, maybe a $200 stock next year or something around that range. All I know is that it's just way undervalued right now, and it should be trading at around maybe a 25 forward earnings rather than a 12. So at least a double from where it is now, just based on the fundamentals and the growth, how much cash it has, how much debt it has, and the industry that it's in, which is financial services, which has a long road ahead of it. So yeah, that's all for today. Thanks for watching. Really appreciate it if you like and subscribe and share this video with anyone who you think it might help. Thanks.